Put down the hammer, and pick up the pencil. You're about to listen to the Savvy Radio Show, yeah. Real estate info galore, so listen up, don't miss it. Hosted by the Savvy Landlord, oh.
All right, ladies and gentlemen. Oh, I always say all right. This one, well, if you listen to my goals a couple of months ago, my goal was to connect, build relationships, and interview 50 people. And that's what I'm trying to do, and that's what I'm doing today. And it's cool how I met this individual. I didn't meet this person I guess individually, but in person. I saw this person through Facebook. This gentleman crossed my path. He works for one of the largest mortgage brokerage in town in Oklahoma City. And I was like, man, I got to get to know this guy, even though I'm not a big fan of mortgage brokers because I was uneducated about mortgage brokers. And this individual off air kind of told me about some products that would be amazing for real estate investors out there. But anyway, let me introduce someone to you. His name is John Mayhue. That's right, John Mayhue, Oklahoma City. And I'm not loosely going to say this, but I'm going to say superstar. And I mean, that's kind of my new word for lately. I mean, you got 15 units. You started when you were 19. You've been doing real estate for 13 years. And I think it's kind of cool that your very first rental property, you were becoming a mortgage broker.
That's right.
So
absolutely.
And so, you know, I've said this before, never on the radio, but in my mind I've said, man, if I could go back and what would I study? It would be finance. I think everything moves around money. Everything is money. Like you can't do nothing. You can't eat. You pay your taxes, on your home. And
right.
It takes money. And I know that I grew up broke and poor or whatever, and people were, anti-money. Oh, I hated the rich. But nothing happens unless a sale is made and transactions are done and it's velocity of money and it moves. So enough of that whatever. But John, so glad that you are willing to be on the radio show. And if you don't know what this is a Savvy Radio Show worldwide. So you're into real estate, you're into mortgages. We're going to break down how does that work. But how did you get into real estate? Tell me. Did you grow up in real estate? Is it something that you always wanted to do? And you're 30-something years old now, and this is what you want to be doing? I know that's like 10 questions in one. But
right. We'll try and break them down.
you are a high achiever, so we'll leave it at that. Take one of those questions.
Okay. Well, when I first got in, it's pretty interesting, Stephen, when you think about it, because I was buying my first investment. So I'll kind of start there, and that's when I got into the business. And you mentioned finance. I was, a young college kid. I was going to school for finance, speaking of. So cool. My degree is business finance, and so that's where I started. I grew up around real estate, so my roots I feel really blessed in. My dad just had his birthday recently, and
cool.
So he was a big inspiration. He had a real estate company. He managed, I think, 450 odd properties in his heyday. Yeah, and so a lot with emphasis on rental management. Not
so he was
sales.
He owned a management company and ran 450 units for random investors. So you saw it all, frontwards, backwards. You met sleazy landlords to successful investors.
Right. And my dad's been around the block. He's in his late 70s now, so he was prior military. But so I always say I grew up with the real estate dad.
Hey, that's kind of cool because if your dad's 70, when my kid's 30, so I'm looking at you, I'll be 70.
There you go.
Interesting.
Good way to think about it. It kind of throws you off when you put things in perspective.
Yeah, totally. Is he cool and hip? I mean, 70, is he in a wheelchair? I mean, when people think 70, they think they're like at the end of the hill.
Right. Well, in my opinion, obviously I'm biased. He's my Superman. So cool. I mean, he is my rock, my strong part, my kind of confidant. So many wonderful qualities. Yeah, he truly is a Superman at his core.
I hope my boy talks like you, man.
Oh, that's
when
cool.
I'm 70.
Yeah.
That'd be rad. Okay. So did he show you the business? Was he just an entrepreneur, or like, did you have conversations of one day owning property when you were 15, 10, or?
I don't remember when it first started, but obviously I was around it since birth. And so my dad wasn't a prior, entrepreneur. He was prior military for 21 years. And when he got out, my mom actually got him into real estate, and he went down that path to open up his company. And so I think in growing up over the years and just seeing what my father had and those successes, and also learned a lot about the struggles, of a lot of
Paying
the things.
bills.
Right. And so I got to see the good, the bad, the ugly, I guess you would say. And so he gave me lots of insight all through my younger years. So I knew it was something that I was very attracted to.
Was it in Oklahoma City this whole time?
Good question. He actually lives in Lawton, still lives in Lawton. So
Okay.
that's where I was born and raised.
Which is about 2 hours.
Hour and a half, yeah. So,
Okay.
Yep, 2 hours.
So just a random question. Is your dad, he must be proud of you. You're doing real estate. He gets it. He understands that you're a customer.
Yeah, right.
Like in his mind, like
Sure.
you're an investor. So what's that like now at his age and what you're, is he obviously proud of you? And like when you guys get together for Christmas, does he ask you like, hey, how's those units?
Yeah, so it's kind of funny that you bring that up, because we almost have to break ourselves away from those conversations, because those dinner conversations a lot of times will revolve around, well, how's your property? Do you have any vacancies? What's going on in the world of real estate?
Well, have you hired a property manager?
Right, and I haven't. I manage them all myself.
So interesting, and you're cool with that. You enjoy the pain of deadbeat tenants. No, but you have a higher end product, which is awesome. But we'll get into that here in a second. But
Sure. Well, and it has, just like anything. You have the late night calls. This morning, I think I've talked to probably two of my tenants in reference to other things: a roof repair on one, a plumbing repair on another. Those things happen whether it's high end, low end. That more than most. Yeah.
That's interesting. All right. So 19, how did that go about? You were in college getting a finance degree, and you decided, hey, I'm going to go get a rental property. How'd you find your first deal? How did it go down?
It's unique how that happened. So my dad was still doing real estate, so he got to be my realtor for my first.
So this
my
is
first
back
purchase.
in Lawton.
That's back in Lawton. Yep, I still remember. It's over on 72nd Street in Woodland Hills North District.
Okay, how'd you hear about it? How'd it go down?
It was a HUD home, so obviously my dad gave me good fundamentals. He comes from old school mentality and
Work
and
hard.
just absolutely. And so he said, let's figure out what the best kind of structure that you want, or the best kind of category of a house. 3-4 bedrooms, 1 or 2 baths, etc. And we made a list, and we basically started initially from the list, and weeded the ones out that we didn't want, and then we went to look at the shorter list. And he always had a really cool theory, and this can help maybe a lot of people that are looking to buy homes out there. He'd say never keep more than 2 or 3 in your hand at a time. So if you're looking at 10 homes, you go find one, you say, oh, this is the one. Then you go look at number 2. Well, do you like number 2 or number 1 better? And then you put those in a category. And if you're looking at then house, let's say number 3, well, do you like number 3 better than number 1? Well, no, I still like number 1 better, but I like it better than number 2. So you put it in number 2's place and then put that one away.
Cool.
And so that
it's
was
a process of elimination.
It was. And so that really helped me. And he said, son, and I'll always remember this. He goes, that way you'll always be able to remember, because if you look at 10 or 15 homes, you're going to forget things. So you're not going to remember the ones that was that the one that had the purple with pink polka dotted walls? Or
so okay, let's go through a scenario. So you're looking at a house and you're like, that's my 1,
right?
And then the other one's a 2.
Yes.
So then you look at the number 3 house. What do you call that? You either have to choose it's a 1 or a 2, and if it's a 1, it trumps the 2.
Yep,
So you have
that's
2
right.
number 1s.
So you'd have the prior number 1 would now be a second place choice. So if that number 1 was sold before you could make an offer, or if you got outbidded, or if there was issues that arose, you still have your number 2 choice. So he was like, always keep that number 1 and number 2 in your hand, and then once you look at a third one, you may still like the third one too, but if it's not better than 1 or 2, then you put it aside and you just focus on your 1 and 2.
You know what's interesting is I just heard a sermon the other day about that millennials can't make choices. They're trying to be perfect.
Right.
And I think that's a good scenario. I think that the most important thing is that you made a decision and you decided to buy a property. Now, you love finance. You would not go to school. And I do have a weird question about, isn't it boring, paperwork, being a mortgage broker? I know, and they change the laws constantly.
Yes.
But what was going through your mind at 19? Was it an investor? Was it because you wanted to own a property? Were you trying to impress your dad?
Good question.
Was it a future, like, hey, I want to be rich? Whatever rich is, wealthy. like 19 years old. People are playing video games, man. I'm trying to get the raw, like, where, you know, I didn't get legit till I was like 27, 20, until I read Rich Dad Poor Dad. And I was like, man, what am I doing with my life?
Great book.
Yeah, totally. So what was going 19? Like, because you're like my future son. So tell me.
Sure.
They're 33, only 10 years younger than me. But what was going through your mind? I mean, most people want to go out on a date.
Right. And it doesn't mean that I still didn't want to do all that stuff or still didn't want to play my video games or all that stuff still went down.
So you're manly.
Yeah, there you go.
You're not a machine. Okay.
Exactly. Still human. And it was, I think, the piece of I was at a job, and I was at a very good job, but I was capped. And so I saw it as, probably all I saw at the time was $ opportunity. I was like, oh, this is great. I can make wonderful money. So when I was going to finance this house, I knew the owner of the company. And he said, what are you doing? Like, why don't you come over here and start on this side of the business? You know, you grew up around real estate. You're doing finance. He knew me. He was actually a manager of mine when I threw paperboy when I was real young, you know. Cool. And so I had known him personally, and I just got to thinking about it, and I thought, well, yeah. And again, probably a lot of it was $ when you're a 19-year-old kid. You're not thinking about a lot of that.
Were you scared? I mean, you're
Sure.
signing a mortgage. What was how much was the value of the house? Can you remember?
Let's see. I think I bought the house for maybe, and I'm going to ballpark here, I think I bought it for maybe 40, and then the bank at that time, there's all kinds of creative financing you could do back in 04. Not that there's not now, because there still is. Sure. Just was different times. I think I bought it for 40, fixed it up, and I think I financed maybe 55 or so, 55,000.
Wow. So it was a no money down deal?
It was no money down deal. Isn't that wild?
What the F is this? I'm like running into all these superstars. I mean, people think that they can't do no money down deal. Okay. So your dad now you have some siblings?
I'm the only child from my father and my mom.
Okay. So that's cool. So he was all involved with the whole transaction. And
he was very.
Man, I can't. You know, I ask my kids all the time what they want to do, and they say real estate. I'm like, what does that mean? They don't know. They're only 7 and 5. But I mean, I'm looking for what will it look like. All right, so you got the bug. You bought this house. You did the repairs yourself. I'm assuming at 19 you were
19
motivated.
Yes. Well, you bring the guys over and you say, okay, let's have some beers. Well, not soda at that point, of course. Yeah. 19.
Well, 21. So yeah, I love that you told me the other day that you had some guys renting the property. You were making money. Was that transaction, your first deal? Like you rented out rooms?
No, that was one I rented. The first house before I even bought a primary home to live in was a rental house. So I just moved tenants right into it. But yeah, absolutely. That's
and then your next time, and your next house, how fast was the next one?
Within a year. It was less than a year later. I bought the house I was renting at the time, and then that's when
you bought the house that you were renting from the owner.
Yep, from the owner.
Please tell me how you got that deal.
So it worked out really well. It was somebody that I knew, and they were giving me a good deal and renting it, and we went in with the intent of hopefully maybe someday I would be able to buy it.
So it was up front, like
yeah,
hey,
it was.
I would like to buy this.
It was, and we went in. The house was full of smoke-filled walls, and it was filled with everything from the passing of the people that lived there. So that was kind of the intention. It's like, we want to move out of our parents' house. We want to rent this place. We'll come in and we'll work all night long for multiple days. So the guys would come over, and we'd have sodas and pizzas. And one of my buddy's dad that was helping me, he said, "Guys, I'll let you use all my tools, and I'll teach you how to go in and do these repairs, but you've got to do them."
So this is your dad?
No, this was my friend's dad. Yep.
Okay, cool. Mm-hmm. All right, so you're in real estate, you're young. How do you get from Lawton, Oklahoma to Oklahoma City, which is an hour and a half drive?
Yes.
And now you're breaking off from the nucleus of superstar dad, property manager, have seen it all. I mean, I got to interview your dad. Like, it's got to happen.
I'd love that. He's awesome.
Yeah, I mean, if he's ever in Oklahoma City, maybe I can drive down there together.
Mm-hmm.
Anyway, I love wisdom. I love older men. I would not be where I am today. They've seen it all. He could probably write 10 books of all the excuses that people have given him. How'd you break off from that nucleus? You're in becoming your own man,
Sure.
how'd you do that?
Well, he was a wealth of knowledge. And so I think a lot of it started when I had that opportunity, the owner of the mortgage company I work for.
Down there in Lawton?
Down in Lawton. So, to kind of...
So were they growing here in Oklahoma City, or did they already have an office?
No, they just had an office there. So the company that pulled me from Lawton to run the location they wanted me to have came many years later. So kind of the roots of where I started, I did things, I always say I was kind of a grunt. I literally did pretty much everything from the ground floor up through my process, which was awesome because
as a mortgage lender,
person,
broker,
right.
Whatever the facilitator you are now.
That's right.
And we'll talk about your job here in a second, but
sure.
Cool. So you were working for a mortgage broker down there, which you kind of got that job being involved in real estate. By funding the deal, right? You were getting
Correct.
a loan. Okay, so let's just recant here. So not recant, but recap. You found this rental property that your dad kind of gave you this cool trick of how to decipher between what's a good deal and not over time. You finally pick one. It's a HUD home. It's a deal. Now you got to get broker. You got to get money.
That's right.
And thank God your dad didn't just write you the check. So you went to
Yes.
apply for the mortgage, good or bad, but you were already in finance, so you probably had some sort of understanding of what a P&L is. I mean, you didn't have to win at 19. And that while you're applying for that loan is how you got that job?
That's right. Through the process of that piece.
I hear that a lot too. And it's just a trick that you, ladies and gentlemen, boys and girls around the world, you need to have anal, detailed, meticulous docs ready. I mean, it's kind of humbling where the banker uses my financial statement as an example. Do it like this guy. And the only reason why I know that is because I have a retired banker that did my financials. He did them. I paid him $150. He made my spreadsheet, made it pimping, and I just passed that on. It's like, but these bankers think I created that. Yeah, okay, buddy. No, I didn't. But they use that, and they actually give me more favor, I guess, would take my call. And they saw that within you. At 19, they're like, this guy is on it. And so he offers a job. Now, Did you just take this job right then?
Well, it took a little bit of time, but I almost want to hit on something you said too. You hit on two killer points that you're talking about the financing and being prepared. Like everybody go in on that piece. It's almost like a resume. You're applying for money, so go in with that best foot forward. And I love what you said too. A very, very savvy real estate guru that I still am good friends with and follow often. He always would say, he's like, I'm not the smartest kid in school, but I sure copied it. It's not about reinventing the wheel. It's just, take those mentor pieces of advice and listen to things like the show. That's right.
I remember I was lost on a financial statement. I remember the first time a banker asked me for that, and I was like, what the blank is a financial statement? I knew from Rich Dad Poor Dad, what's liabilities and assets, but how to formulate that legally, because I found out later in life that is actual legal document that you're bound to. And I was lazy / didn't know, and I was scared, and I wanted to borrow money, and I fell into that. It was the best decision I make. People, $150 I'm able to borrow millions of dollars because I stepped away and hired someone better than me.
It's unbelievable.
So that's why I'm interviewing you. You changed my mind the other day on the perception of mortgage brokers. I just thought mortgage brokers or mortgage people were just brokering out your loan and they're making extra money on it. One should go to the source. When you broke it down to me that for $995,
$950. Yep.
So if I can borrow $200,000, which is, if you do points, folks, ladies and gentlemen, that's 1%. That would be $2,000 for an origination fee. But your company where you work at, there's a flat fee service, and you get the best deal, best interest rate, and you deal with Freddie Mac and all that other BS.
That's right.
Right. So, all right. So then you come up to Oklahoma City. How'd you get this job? And you work at First American Mortgage, which is one of the largest.
Yes.
Because they have a giant sign.
A big digital billboard you get to see from miles away. Yeah.
So I've heard of this name for a long time. I don't know how I've heard of that name. And I never knew you until I met you the other day. So right. I just know I live vicariously through you, and you wear a white blazer. That's all.
A lot of people like the white blazer. I have to brand that.
You're like what is that? Miami Vice of Oklahoma City.
People have actually said that.
Yeah, totally. So how'd you get that job?
Well, and I think it came from humble beginnings, of where I started. It came from recruitment. I was very, very happy at where I was each step of the way, and I think it's important. You always open your mind for opportunities. You never just shut the door on anybody. And before I moved to First American, the owner of our organization actually reached out to me a year ago. I'm sorry, not a year ago, a year prior. Yes, a year prior to me making that actual move. So I was very deliberate, and I was very thoughtful in whenever I was analyzing that opportunity. But like when I say on humble beginnings, you asked about that process when I first got in the business. Gosh, Stephen, I did everything from A to Z. I mean, when I worked in there, literally, I learned all the processes.
Underwriting details,
all of it. And I worked for little to no money. I wasn't originating loans when I first came on. I was just learning the business, and I actually, for a while, I was partly a telemarketer. They would have me go to the courthouse, pull public records, and I'm big about scripting. I think you learn and get efficient through those. And then through that process, I would have blanks to fill in. And I was finding people that owned homes that were in high interest rate mortgages. And the owner of my organization said, I want to get you on the phone, get you talking to these people that have mortgages.
Yeah, you need to have a podcast. You got the voice, homie.
Oh, I appreciate that.
So you were like mining deals in my world. That's what I call those, mining deals at the courthouse, but you were mining it for this guy for mortgage leads.
I was. And I remember the hardest thing to overcome was, and I get it, was getting somebody's social security number, because I was cold calling these people and saying, I don't remember the exact script, but it was along the lines of wanting to save them money on their home loan. And we were able to do it tons.
Which is great.
Yeah.
Well, cool. So you started out in the sales crap job that no one wants to do to now what's your job now? What do you do? What's your title? Tell us about what you do now, and what do you do there?
It could be put under like mortgage expert, mortgage advisor, loan officer. There's so many names for it, right? But I mean,
mortgage expert.
So what?
But like you run an office there, you because I know you told me the other day that there's departments. You have a whole underwriting, which is, guys, underwriting. I'm going to do a podcast on it someday. But underwriting is the people that vet out who you are, or the deal, or the opportunity for the lender.
I joke. I always say they're the ones with the approve or decline stamp.
True. And they're the jerks too. And they're very anal detailed, and they have no social skill.
Right. A lot of them. We're blessed. Ours are really neat. But yeah, for the most part, they're kind of the back end process. So what I do, the easy way to think about it is when people want to look at buying a house, I'm the money guy. I talk to them about, okay, well, what does your income look like? What basically, like you said, that financial statement. How does credit look? And if we qualify, great. Let's talk about all the wonderful mortgages that are available.
So you're pre-qualifying them,
yes.
To save time and see if you can fit them into your program.
Absolutely. And a lot of times, too, you don't want to go out and start looking at homes and falling in love with something and then find out, oops, we can't afford that house. We can afford this house. And that's a hard expectation to kind of reset. So it's just smart. It's free. It doesn't cost anything, at least with us, to come in. It's literally a conversation.
So your company, First American Mortgage, is a service that you provide for anyone wanting to buy real estate.
Absolutely. Residential real estate, to be specific.
So that could be a first-time buyer,
yes,
with incentives, to a real estate investor like myself. And then you guys package these loans, and you mentioned that you guys fund some of these loans through your company, and then you sell it to the open market.
That's right.
Now, a lot of people may not know what that means. Explain that whole process, if you don't mind.
Yeah, well, and so that's a great point. It can be very confusing. So the best way to think about it is everything is done in-house. When you say a mortgage broker, the easiest way to think about it is a middleman. You as the client wanting to buy a house would supply your information, and then they're going to send that information to Jacksonville, Florida, or Dallas, Texas,
or California,
or wherever.
I just got one of those.
That's exactly. We talked a little bit about it, and so they're just a gatherer of information, and they send it off. What's great about our operation is nothing leaves our office. We do everything. I've got my own setup team, my own processing team, underwriting team, closing team, post-closing team, and the owner of our organization is there. So the benefit of that is we're going to start the file, we're going to close the file, we're going to get them to funding, and we're going to do it really efficient.
Well, how about somebody that has a deadbeat credit score like 500?
That's a great question. So on that piece, if they can't qualify based upon credit, I do a whole different tier. And this is something that, we talked about in my past, and I've been doing this 13 years almost now. It never was comfortable for me if somebody didn't qualify to say, sorry, see you. And I hear that so many times. A lot of people come to my office and say, well, so-and-so lender talked to me and I can't qualify. I don't know why or what the case is. So I always let them know, let's define why. Number one, you can't qualify. That's most important.
Off of their credit's bad
Credit or
hickey
whatever.
or something, or their income to debt ratio.
Yes. And so let's say it's credit, for instance. If they can't qualify, I'm going to let them know why, and then I'm going to coach them. I'm going to spend that time. This isn't something that costs them money. I'm going to show them what needs to happen. I'm going to give them a website. By the way, this may be a cool website I give you.
Yeah, please.
It's more information than anybody will ever dream of wanting to know.
Come on.
So easiest way, it's myfico.com. But the key in saying that is ignore any of the stuff they're trying to sell you. Scroll all the way to the bottom and click credit score. So this is the big key, because that's where the free information is. It tells you facts, fallacies, what goes into your score, what helps it, what hurts it. It has the Fair Credit Debt Collection Policy Acts, all the acts. It has videos. It has charts. I mean, it's an unbelievable free resource. Now, again, this site will sell you credit reports. Sure. They'll sell you credit monitoring, but free stuff. So myfico.com, scroll to the bottom, click on credit score.
Let's just get some gauge here. I mean, you're real well spoken. You know your passion. I can tell. I mean, you're like a scripted. You should be on the radio. But how many transactions do you think you've done? Have you ever kept track of that?
Wow.
I mean,
no.
And you know enough. I mean, it's like I love my title lady.
Yes.
Okay, I'm super loyal to Old Republic Title. I'm telling you right
Great
now.
company.
They're just the ones that do it for me. And she's been doing it for 37 years. I mean, there's nothing that gal. You sound like that type of. You've only been doing it 13, but you've probably seen thousands and thousands of transactions. I mean, credit reports.
Absolutely, and I see them every day. You know.
And so, like, how many? Let's just give us perspective. How many transactions or how many loans are going through right now, or what do you touch?
I mean, you could say maybe I'd have about, depending on whether they're actually on or people I'm talking to. So people I'm talking to on an average time, maybe about 30 to 50 in a month. Okay. You know, realistically, we're just having conversations.
So then let's get another perspective. I call you up. I give you my social number. I say, hey, I make $50,000 a year. What's the process of getting a loan? Well, first of all, you got to get pre-approved. And how long does that process take?
Well, when they call me, as long as there's nothing unique or unusual about the situation, I should be able to let you know if you qualify realistically in like 25 minutes. It should be fast because I know the right questions. Score. Yes.
And what is a typical, I don't know that like Fannie Mae changes their for a while there, they had their standards up higher.
Yes.
Then they wouldn't loan after the subprime dilemma. And then do you guys gauge off of Fannie Mac because you're reselling these loans? And we forgot to get into that, but
sure.
What's a credit score that's pretty easy? You see it's an X amount and you're like, oh, they're approved.
Right. Well, and of course, the higher the credit, the more options that become available. And it's the investors that control that, the ones that are ultimately going to be keeping the mortgage, because we abide by Fannie Mae and Freddie Mac, But what we usually like to see is about a 620 credit score, not the high credit score, not the low credit score. They go on the middle of the three scores.
Of all three?
Yes, sir.
And those are TransUnion, Equifax,
and Experian.
Okay. And is anyone better than the other?
No, I wouldn't say. They're just scored differently. So they take the middle one that we look at, and that's where we'll gauge.
The middle one. Okay, that's cool. Okay, so that come in, I apply. You will let me know within a certain amount of time, and then you've seen creativity from there, so I'll know within a day if I'm approved. Okay, great. So then I'm this great new home buyer, maybe a landlord of future. I find a deal. Then I call you, or do I have my realtor call you? I say, hey, John, what's up, homie? Remember me? I'm credit score 700.
Right.
What's the next step after that?
So the next step is, at that point, and you were talking earlier, you mentioned financing is kind of boring.
Yeah, so, I put that down. That's one of my questions. How do you sustain? But I don't want to get you on that.
So, I always tell them, once I do get them qualified, once we've had that conversation, or if we need documentation, we'll take a look at that up front. But I say, now's the fun stuff. We've been doing all this boring numbers talk. Now you get to go find either your first time home buying deal, or your dream home, or we're talking to an investor, maybe buying their first rental property that I'm coaching, or maybe they're buying their 20th, whatever it may look like. The next piece is the fun stuff. They go find the house, and once they found the house, that's when we really get to cranking on my end.
Okay, so when do they get funded? Like, what's the
within 30 days.
So that's typical, just loan process. And do you guys pre-sell this before you write it?
No, what we'll do is we'll analyze it based upon their guidelines. And with our office, people have been in the business a long time. They know what they're looking at. So it's going to make it a lot easier to where if we say yes, we're going to close the deal.
Okay. So you guys have your own funding department, investors that you work with. You have a pool of money, right?
Yes.
Correct me if I'm wrong. And then you also have the process of moving this money over to the government, which is FHA, which is funding the deal. And you get do you know does the terms change per se if you're going to do it in-house versus already know that you're going to sell that loan?
Well, there's a lot of different processes. With us, we're not going to we're not going to keep any of those loans. They'll either be sold, whether it be FHA or conventional.
Automatically. That's just your guys' business model. But you fund them just in case. Do you fund every single one?
Every single one, because we make it efficient that way. That way, we're not waiting on some third party to get them to the closing table.
And that's what happened to me.
Yes.
And especially now they have the CD rule.
Oh, yeah.
Which takes 3 days, which is the closing disclosure.
You got it. Yep. Closing, yeah.
I remember someone said, well, "Yeah, we got to do a CD." I'm like, "What?" But that's just
you thought you were going to sing.
Well, I was like, "Yeah, that's true." I was like, "Money in a bank that sits there in a CD? No way, Jose."
Oh, yeah.
Money is fluid. All right. So how do you, doing this for 13 years, almost 14 years, it's a effing same business over and over again. Fill out the document, get your credit score back. Then we're going to submit you to underwriting. That girl's not going to like you because you have a last name named Van Kallenberg and she can't spell it.
That's right.
So you got this. How do you keep motivated in what you're doing as your day job?
That's a great question. You have to have passion in what you do. Otherwise, it's just a dread. I would say what I like, a few tiers, I think. Number one, I've got really good business partners and referral sources. So, and talking with them and visiting with them is just really powerful.
You're talking about the people that are providing leads for you or
Correct.
Opportunities from people that need loans. Like I'm going to be an advocate now.
Yes.
Just because of your persona and what you're doing, and it's only $1,000 to get a loan written is extreme. And I love that transparency that you guys don't know this, but I've had this conversation with him for about a couple hours of the day. And I'm like, yeah, mortgage brokers like back in 2006 were about making $15,000 on a transaction or $6,000 on an easy loan.
That's why we have the regulations we do right now. Everybody says, well, what's the reasoning? And so I sometimes get to educate them and say, well, here's the reason why.
And most people are scared, or they're just scared that they're not qualified. I remember selling houses back then in 2006 or trying to, and people didn't even know that they could qualify. Mm-hmm. They just thought that they weren't worthy enough that they couldn't get a loan. So out there, guys, 620, probably a job, 2 years?
Not even that. Not necessarily. They like to see 2 years, but we qualify people every single day where they've gone on to a new job. Now, there's, of course, things that have to be met with that. So we have that conversation.
Income or ratios?
Sure.
How about entrepreneurs?
Entrepreneurs all day. We're gonna analyze that. We'll get.
And you can still get that to FHA.
It depends on which was going to be best for them. I mean, if it's going to be an investor deal and they're buying a rental house, then conventional will be the way. FHA is the Federal Housing Administration. That program's created for owner occupancy buyers.
So when you say conventional, what does that mean to someone versus an FHA? That would mean conventional would just be for anything. That could be an owner occupied or for a rental.
Yes, sir.
And FHA is just owner occupied only.
That's right.
Or like a VA loan or.
Yep, VA would be owner occupied. And now that doesn't mean that they buy this house and then this young, let's say, gal finds a great guy and they get married and they have children and all of a sudden this 2-bedroom, 1-bath doesn't work anymore. So now they may decide, well, we want to keep this for a rental house, for our future, for retirement. And then they go and acquire that new house. So
that reminds me of you.
Yeah, true.
That's how you did it.
That is how I did it.
Well, no, we didn't get into that story where your rental houses are like forced rental houses. You just kept moving up the chain.
I did.
There's something that I learned from you the other day that was powerful too, is that you've built a network with, and obviously they reciprocate the builders.
Yes. And
you've been buying rental property directly from builders, and I guess they're in a position where they can't sell it because the market has shifted or changed. And I know we're changing subjects real fast here, but you've acquired a few assets from them. How has that been for you as an investor? And you've kind of fell into that.
Sure.
Is that a business model that you want to increase or multiply in that area? Do you like the brand new home? Is it versus, you have a spectrum of homes from low grade all the way up to 2,000 plus a month.
Yes.
How is that matrix in your life? How is that process of you buying it from a builder?
Well, and it's kind of, and I've been able to coach a lot of builders too, because they, like we had a conversation the other day, they're building at such a low cost. To keep that as an investment can be a really lucrative deal.
For them.
For them, yes, absolutely. And so to answer your question, it's just worked out really well. Say the house sat on the market and it didn't sell, and I would even talk to that builder and say, hey, this is something you should really think about keeping and renting. But if you want to sell it, here's the price that I'm willing to pay, which of course is a below market. Yeah, substantial below market.
So like, okay, give us some tricks. You've seen some contracts go down, good, bad, the ugly.
Yes.
Contracts that busted. Builders are very prideful, very arrogant. So is this a trick that, have you seen anything, or can you elaborate on? House has been sitting. I know there's a one that's not far from my neighborhood for over a year. I see it on the county. I see that they're fortunate that they don't have to pay the full tax value.
Yes.
Builders have a way with the county somehow of paying just the lot rent. I don't know how the F they do that, but because I'll see a $300,000 house in a neighborhood next to mine, and I'll be like, whoa, let me get that deal. It's been sitting for a year. I thought that builder would be choking out.
Right.
Can I, what trick can I just call him up and offer him 30% less?
Well, and so you created a thing and made me think of a couple things here in this
Cool.
conversation.
Sorry,
So no, it's great. It's good. I like it. And so for me, it just, the builders knew me and they knew I was an investor. And so the conversation was easy, and it was more brought to me than it was me to them. It wasn't the house that I necessarily just sought out to buy, but you know, a good friend of mine, he's real estate up in Tulsa. He's rocking it out. He always said something. So you asked, what could I do? How could I confront this situation? Well, he used to always say, John, if you don't ASK, you don't GET. So worst case, they're going to tell you.
Just ask them.
Yeah, just ask. Worst case, and this came from, a lot of insight. A lot of my wisdom came from my father. He said, son, worst case, they're going to say no. So I implore that mindset in almost anything that I'll do. You can always pick up the phone, and I would encourage. So say if somebody does see that, I talk to some builders, you know what they call it when it sits on the market for a year?
What?
A birthday. It's bad to have a birthday when you're a builder.
I was like a dead bird. I mean, a dead egg.
Yeah.
A bad egg. Okay. So
they're motivated then.
Okay. Let's talk about, if they don't ASK, they don't GET. I like that.
Yes.
Okay. Now, you, Mr. Conventional Loan Mortgage Broker guy,
right?
And you give me a term sheet, an offer sheet, or a proposal. I get, what is it called when you are finally pre-approved? I give you the house, and you're like, here's the terms. What's that called?
Well, the loan estimate.
Okay, loan estimate. Yeah. Okay. And I see on there that the interest rate is 6. Mm-hmm. Okay, I don't know what you can tell me interest rates. Of course, it's going to change tomorrow anyway.
Right.
Can I negotiate that with you and ask ASKE?
Yeah, ASK, you don't GET? Yeah, for sure.
So say you turn in a term sheet for 6%. Can I ask for 5?
Well, you can always ask. What's neat about our company, so that's important, because when you're out there and you're getting financing, worst case they're going to say is no. So it depends on who you're working with. We talked about it, and you said the word that I like to say to my clients is that we're very upfront and we're very transparent. Here's the fee, and I'm going to give you the best rate, because I'm not paid through the proceeds of their cost. The owner pays me when the loan funds. Yes, I'm commission only.
Through that, you're only commission.
I'm only commission, yes.
Wow.
So I'm only paid on a commission basis.
And so you're like Best Buy. Well, not really Best Buy. Best Buy's paid, they're paid regularly. So that's why you have a relationship. That's why you're networking. But you're not paid on a percentage. You're paid per transaction.
I'm paid with ours, a guaranteed amount with my
because you're only
boss.
charging $995.
Mm-hmm.
So
$950. Yep.
$950 gets you a loan per se.
Yes.
Like sounds like a used car salesman. Get you the keys for the home.
Right.
But you get a percentage of that.
Yeah.
Well, that one fee, or is there more? Or because they make money on the back end from selling the loan?
Yeah, I mean, there's some that's made from the sell of the process. So I have mine is a set rate, no matter what the aspect is. With the owner of my company, it's set percentage aspect, and I'm paid, and so I get to see the raw pricing. So when I go in to lock in a loan, I can literally give the client the best deal based upon their credit score, down payment.
Well, that's what happened with 2006 was like the guy would be serving a loan that would offer a bigger spiff or a bigger money.
Yes.
But that's not in your case, but you still get percentages though.
Mm-hmm. So I can't go in and do that. Like what you're referencing, back in the day, there were so many bad things going on. So a lender could go in and say, well, market rate is, and at that time, I don't know, let's say it's 5%. They may charge them 7.5% because their credit had some blemishes.
Sure.
And they're making $30,000. I've heard from some of these guys, has just crazy amounts of money. Plus, you talked about
fees
percentages, the fees.
On the front end.
Unbelievable
Origination,
stuff.
junk fees.
Yeah. And now there's a lot more limitations that our industry has, but our company doesn't allow that. Meaning, even if there was a way to charge more, I don't get more money. My commission does not change. So I can literally give them the best deal.
Okay. So your job today is based on volume. You have to turn out a lot of people. So you're limited time, and you have a ceiling.
Yeah.
So real estate is on your mind. What goals do you have for real estate? Is that something, you enjoy your job, you're passionate about it, you're all giddy about it. I'm amazed. 13 years, right? Is that right?
That's
13
right.
years later. Yeah. Very rare for a millennial, because you're like, you got one side on the millennial, you got one side on Generation X.
That's right. I straddle it.
Yeah, you're
best
right.
of both.
You're like ski doing here, or
That's
whatever,
right.
like skiing at the Table Rock Lake. But what's your goals now? Like 33, you just got engaged. Congratulations!
Thank you. She's a sweetheart.
And I definitely think that people need to wait till they're 30. So I don't. Who am I to say that? I think that you just get mature at 30. So you're about to get married. Goals, real estate goals. Do you still want to grow your portfolio?
I do.
Would you have ever thought about owning your own brokerage or partnering with this guy or whoever he is? Or
Sure.
big goals? Tell us what drives you now. There's got to be something. I know we struggle with that as entrepreneurs, but what would a goal be for you right now? Is it more? I'm not going to speak. You go.
Okay. Well, two different ways. One, on my mortgage lending business, I'm always looking to expand my team with quality people. That's the key. I don't want quantity. I want quality, and it's hard to find. So that would be the number one, I think, piece that I want to continue, not only growing, but making it continually more efficient. So we maintain that absolute best efficiency.
For you to grow to make X amount more money, you would have a bigger team around you.
Yes.
Is there a way that you can ever automate this, or do you have to touch every piece of paper that comes through to get paid?
Well, there is licensing requirements, state and federal. So, I couldn't just put that on a team member that doesn't have that. So I would either have to have them licensed on my team or me to still have that.
It's kind of like an insurance agent. They
Sure.
have the girl in the office that has a license, and she can kind of write insurance per se, but he has to verify it at the end of the day.
It's on his name.
license.
Yeah, his license. Absolutely. And it would be the same concept. I'm very fortunate. I'm very blessed. The company I work for is amazing. The owner is spectacular. So I would say that would be my focus, is to continue always looking for ways to become more efficient for our clients and business partners, and also to extend that team, which I think will be part of that. So that would be the side one, the mortgage lending side goal.
Okay. All roses with you. Let's get into a little bit more heated. What do you do when someone's declined? How do you handle that person, and what advice would you give them?
It's a great question. It's a very touchy thing, because it takes a lot of encouragement for somebody to come in and sit down and say, and it's a vulnerable place. And so when they can't get financing, I almost don't like the decline option. I like more of not right now, and here's why. And so I handle it very gracefully, because, and I commend them, because this is the hardest part, Mr. and Mrs. Homebuyer, in coming in here and sitting to me. And I'm so glad that you made the choice to, whether it be buying an investment or their first house or whatever, to make that step. I know it's a hard step to do. And so from that being said, if they can't qualify, I let them know. I define as to why. We specifically, here's exactly why, and here's a roadmap. Instead of just, the example was given to me by somebody years ago that I know you can see me, but our listeners can't, but they kind of give them the boot and they kick them out the door and say, sorry, declined. Mm-hmm. Because it takes a lot of time to care about people, and it takes a lot of time to love on somebody. And again, I'm commissioned only, so if that deal's not going to close, they can't do it. But what I've found is, if you do the right thing, the money will always follow. Yeah. So you take the time to set them up on a roadmap. And this is something that I thought, I just not thought of this. I wanted to say earlier, it's a humongous passion when it comes to my mortgage lending. Is if they're willing to work on things, I'm willing to take the time to help them. And
that's me, man.
Yeah, it's big, because I'll tell you what an amazing aspect when you're at closing, and it's been 1 year, or one case was over 5 years for a particular
I was gonna
family.
ask you that. What's a normal typical decline? Do they hang in there? And I'm assuming it's a credit or some debt.
Right. I've seen some come back as early as maybe a month later, and then some. My longest one was almost 6 years later, and to see those tears, literally tears flowing at closing.
I forget that you're dealing with people. This is their maybe one and only purchase of a home. They don't even know what a HUD is, or now a CD.
Yes.
And you are changing their life, you're the gatekeeper of this unlimited funds.
That's right.
And no one's ever explained to them how it works. How does it process work? Like, I'm going to flip it. Yeah, it's sold to the open market. There's this thing called the Fed that regulates the interest rate, and there's 2+ prime.
And they don't need to know all that stuff.
I know. I love it. It's fascinating.
It is.
I love banking in general. I wish I would have got a finance degree. And I don't need it necessarily today, but a lot of people don't know, and they just don't understand why. And I like your approach. Plus, they're a long-term customer, and they'll come back if you treat them right instead of saying no. Interesting. And the cool thing, I guess you guys have a standard with all. There's a standard for all banking that if they can't meet these requirements at First American, they're not going to be able to make those at Bank First down the street.
That's right.
Because it's the same government regulations.
It is. And so then I can tell them that. That way they're not spinning their wheels trying to check other places. But as you and I also talked, we have other resources. If they can't qualify conventionally, there may be some other avenues that we can venture in. And my partners know, because like we said, my business is only based on word of mouth referrals. So with that being said, if it doesn't work with me, and I know that it will somewhere else, so I align myself with knowing those types of people to still get their dream to be a reality.
Awesome. All right, John, it's only been 45 only. It's 45 minutes. It seems like 10 minutes because it's just powerful information. And the rule is you should have a podcast no more than 20 to 30 to 40 minutes, and I'm always over that. So we got to wrap this up, man. I got to have you back on the radio, maybe more specifically on borrowing money or mortgages. And they're banging on the door. I love it. This is how many people want to be on the Savvy Radio Show.
That's right.
That's
they're
our heat and air
lined
guy.
up.
That's our heat and air guy. A little slow. I'm like, bro, you got to have that AC blazing cold when summer comes, and it's 70 out there. So, what advice would you give? I know you're twofold, which is you're a great person because you're in the mortgage broker business, or not broker, mortgage business, writing loans, originator, pre-qualifier. You know all this knowledge. And you own rental property as well. What advice would you give to someone that's on the fence, A, as a home buyer, and B, as a real estate investor?
Okay. I would say on the first part, if you're looking to buy, you're on the fence, just go talk to experts. Go talk to educated people that are going to offer true opportunities and get creative. There's so many things we could spend a whole session, like you're saying, on just financing or creative financing when people come in and they can't make that deal happen to where I can just by getting creative.
I'm going to have you back on, man. So be ready.
That's awesome. I look forward to it.
All right. So what you're saying, let me sum that up before I ruin you on number 2. So, talk to more than one person.
Sure.
And that's a rule of thumb that I do. Like, I have an idea, but I want to verify it with other people. If I get 3 people that are on the same page, I know it's kind of has validity to it.
Yeah.
Okay.
Great advice.
So that's that one. Okay, good. And mortgage, and if you're in California, there's other. Oh, side note. Okay, then what's your advice for a real estate investor as a landlord? And you got 2 calls today.
Yes.
What advice would you give them?
I'm going to say something, and this is something I've been thinking about: analysis paralysis. I think so many people are just so hung up. I talked to an investor the other day, and oh man, he's going to be a rock star. He's so ready to pull the trigger. But I've been talking to him for 2 years, and he's still not bought a house. And he has a realtor, and he's actively looking, and yes, he's missing out on deals. And so I would say, yes, become educated. Yes, look at that. But sometimes you have to take that plunge. Now, it needs to be an educated plunge.
Sure.
But
I
think
started. If you get around people, I'd feel comfortable enough to call you up and say, hey, man, this is my deal. This is what I'm looking at. And you're like, yeah, that's a deal.
Yes.
And you know enough. If you're friends of John, please call him and contact. And I love what you said. Analysis paralysis, guys. Just pull the trigger. If you're not, I'll buy it from you. If you're educated enough, you know what's going on. A real estate investor that I helped 5 years ago is getting out of the game. He's moving. And since I helped him, just like you, helping people, you will return on investment. All right. Well, that's the Savvy Radio Show. John Mayhue in the house, in the hizzy. If you need a mortgage and you have never had one before, you need to check out First American Mortgage, Oklahoma City. Do you guys have offices in Tulsa too?
Well, we do it all over the state. I can finance anywhere, and they can reach me at MayhueMortgageTeam.com.
Mayhue, so it's Mayhu
You got it. And then mortgage team.
Mortgage team. That I always struggle with that. It's MORT.
Yep. MORTGAGE. That first G gets missed sometimes.
Gets
And they
everybody.
can Google or find me on Facebook too. I've got my business page on there.
He's on Facebook. And then is there a number too or an email that's
I'll give him my direct cell phone.
Okay.
So
He's taken, ladies. When you see the celebrity guy here, Mr. Hot looking dude, you'll figure it out. But what's your cell phone direct number?
Direct number is 405-808-4412.
Okay. Hey, if you need to be educated and you're seriously considering buying a house, I definitely recommend John. He's been wonderful to get to know, and he knows a lot of my friends, and that's how I met him. So definitely hit him up. I can't wait to have you back. I've been working on a bunch of content of creative financing. So this is your way now. Be creative in your own business. I know you've told me a couple of deals that you've orchestrated creatively. You did your very first deal, no money down, rock superstar. And start thinking about that, and I'll get you back on the radio show for that. That'd be really cool to have you back.
Sounds good. Thanks for having me.
All right, man.
Investor Weekend is not far off, with over 10 information sessions to increase your portfolio. Log on to www.investorweekend.com. Whether you are a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Join us for a powerful, knowledge-packed weekend with over 10 informational sessions that are bound to enlarge your real estate investments. You will hear from the best national and local real estate investors that will share practical and relevant experiences with you, the investor. There will be several networking sessions to connect with other like-minded people for potential funding, partnerships, and yes, hot deals. Go to www.investorweekend.com. Did you know we meet once a month for the Landlord Lunch meeting? The third Wednesday of every month. Go to landlordlunch.com.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.